Welcome to the Learning Investor Podcast. Sit back, relax, and take it slow. Curious minds will always find a way to grow. So come along, let's start the show.
Welcome to Learning Investor Podcast. I'm your host, Orrin Potts. Today we are on round two with Donna, Reid. Welcome, Donna. Thanks for coming back.
Absolutely. I enjoy your company so much. I'm back again.
Awesome. So today we're going to be talking about syndications again, but on the other side of the coin. So before we learned about some terms on what you need to understand when you're looking at this type of investment. Now we're going to be talking about how to get started. So this is going to be going into some tactical information on things you need to do, or what does it look like to get started with this type of investment. So first off, Donna, what's an example of a deal and how is it going right now? That's the first question.
Okay, great. So I know we went through the introduction, but just a little bit about, first we're talking about syndication. And
Yes.
Then we're talking about the example of a deal. But before we go to a deal, let me just say a little bit about myself and why I'm here to help anyone who's looking to get
Perfect.
started. I've been in real estate for over 20 years. I hate to say how much. It's over 20 years. And I love real estate. It's my passion. One, also love to take someone that is just starting and build them up to create passive income that they are not looking, and it just comes in like a mailbox money. That is basically what the passive income is like. And that is something that I love to do. And another thing I love to do, and I do what our company does, is find opportunities. We look for different opportunities for investors so they can make a good return. So when we're looking and you're deciding, let me get started investing in real estate, what you want to look at, first of all, educate yourself. Where do you basically want to start? Which role do you want to? You want to be a general partner, a limited partner? Learn about what role is good for you. But you also, when you educate yourself, you want to understand all the lingos that they may have, like cap rate, NOI, net income. Learn those things, but you can, if you look at it, it's not so much a learning on your own, but it's building a community, building a networking of people that have done it before, like mentors, done it before, and that's where you want to be able to reach to. Okay, look at you want to work with brokers. Brokers are the one that's going to have the deal. You want to work with them, and then you want to be able to say to them, this is the deal I want. And then you got to know how to speak with them. So having a mentor, build in a community, in a networking community, that will take you further than what you think. So when you also looking at the structure, example of a deal, look at the structure, analyzing the deal. What is due diligence? What's that really about? A performer. What is a performer? Performer is just the future of what's going to happen to the asset. How is it going to grow? Your prediction of what it is. Look at when you do due diligence, you're looking at performer, expenses, your return, location, and you want to make sure that your GP, the general partner, the one who's in control of the asset, has a plan and also experience with that. Let's look at, after you have the deal, you educate yourself about it, you know which role you're going to be in, you're in a community of networking people, you analyze the deal, you find out what the due diligence is all about, right? Location, property condition, the rent trending, what's happening there. You also getting ready to sign the documents. Now, 2 documents you're going to sign is called the PPM and the operating agreement. PPM is just a private placement agreement. And what it does is that it's just going to give you the layout of the deal, what you invest, what was the risk, and what the returns will be on that. So it's a sometimes it's a lengthy document, but it's so good to go through that because it gives you the breakdown of what you're investing. Then you also want to look at how you're going to collect your passive income, right? The general manager of the property that manage the property, right? The tenants, the maintenance. How are you going to receive your money? Is it going to be monthly or quarterly? And then you want to look at the exit. How am I going to get my profit and when? Is it 5 years, 7 years? And how much am I going to get? Am I getting 70, 30, 80, 20, right?
Mm-hmm.
And the limited partner does get a big portion of it. Why? Because they may invest a little bit more in that. So those are the key things to look for when you're structuring the deal or when you're looking to start investing in the deal.
Gotcha. Yeah. So it's especially with the LP and the GP, like the GP, they could put less in, but they're doing a lot of, I would almost call it sweat equity, right? They're running the project versus the LP. They are going to be providing the capital. Here's a bunch of money to run the project with. So that's typically why that split goes that way. So that's great. Getting started, we need to for me, it was connecting with you a few moons ago. I actually think it was about 4 years now.
Oh my gosh, that long.
I think it was a pretty, it was a while back. So
yes.
I want to go into, the steps into getting started into an investment like this. So for number one, they need to connect with someone like you, right?
Oh, correct. Yeah.
Yeah. And yeah, go ahead.
No, I was just saying, yeah, it's just basically connecting with somebody that has gone on before. Also, what are you looking? You're looking to put it in a fund, and then the fund invested in different assets, depending on what the structure of the fund is. Or it's a syndication portion where it's just a group of people coming together and they're the one investing that one single asset. So, yeah, it is having a mentor and finding somebody who has gone on before you as well.
Gotcha. And then step two, that person, whoever's either involved in the deal, are going to give you information on a deal, right? So you're going to be reviewing all those things that you said, and it's typically going to come on the form of a deck or a PowerPoint, where they're going to make their pitch on, hey, this is the idea, these are the types of returns we're going to get, expected to get, assuming the risk, and then you're going to analyze that deal and the timeline that fits your needs. So one thing I do want to ask you, Donna, is what is your advice on when you should invest? Like, where do your finances need to be able to do any type of investment? Like this is just your personal advice.
That's really a tricky,
Yeah.
I mean, you look, no, because you look at the investment and you'll be like, oh my gosh, I love it. I want to invest in it. But I always say, wait until you are comfortable, one, right? Not only comfortable, how liquid are you? Right. And then you want to say to yourself, don't take your last dollar, your last 50,000 and invest, because you want to make sure that you know which way you're going with that. Okay. So what I say is that before you invest, you want to make sure you're looking at these things. You also want to make sure that this is where you want to end up. So the best time to invest is when you have personal, your finances are together, maybe 6 to 12 months, depending on your expenses. You have a steady cash flow coming in, right? And also the market timing. Is it right now for you? Are you looking to retirement, or are you looking to get cash flow, passive income right away? Depends on where you are with your career. That's where you want to look at. And also the long-term set. Do you mind it being away for 5 to 7 years? Or what would work for you? You just got to be patient with it. So that's one aspect of it when you think about financing, or when you think about, should I invest right now? Think about your network. What's your debt situation, right? But the most important thing with investing in multifamily, you want to make sure that all your money is just not on one deal, that you have assets out there that is working for you and there. So that makes a big difference. But one of the additional advice that I would have is that start small with your syndications and then gain experience before committing to millions, right? And even if you don't start small, think about the GP that you're saying, oh gosh, I'm really investing with this GP. And what we do at Reid Elite Capital, we go through and look at track records. We do background checks. And also in our underwriting, we don't underwrite it on our own. We underwrite it with three other people, three other companies that are looking at that one asset before we present it to our investors. So we want to treat our LP, our limited partners investment, just like a long-term passive investment for them, so that they will be able to understand and gain the best knowledge before they invest and also the best return. I know it's risky at times, but yet still, it is always say, the more you know, the more you'll grow. So that's where it comes to getting the best advice and sticking with it to get that much.
When you were talking about underwriters, you were saying, yeah, we have a handful of underwriters. One of the deals I undertook with you specifically was because it had 11 underwriters on it from multiple companies. That's a lot of eyes on one deal. And when you have that many people that are independent of each other, looking at a deal, it just, for me personally, made it feel a little bit more safe, like it's being scrutinized more. So, absolutely. That's one of the ones that I dove into, is because it had so many eyes on it.
Yeah. It's always best. I always say one eye doesn't mean anything. I could have missed the number. I could assume the rent rate was okay. But when somebody else gives their thoughts on it, then you're able to rebuttal and say, oh, you know what? I see what you're saying. And maybe not, but it create a conversation, because you got to remember, the other person, your LP, your limited partner, is trusting you. So you want to make sure you're pulling out all the stops and the background checks. Even with the 11 underwriters that we do have, we do the background checks on the GPs, no matter what it is. So it does take a while, but definitely it's worth it in the end to get those underwriters correct and work with them as well.
Yeah, I heard a term. It's not like specific to syndications, but it does lean towards real estate. Is you make your money when you buy the asset.
Yeah, that's so right.
Yep,
that's so right.
So
yep, you sure do.
If you jump into a deal and the numbers aren't right, it's not going to perform the way you want it to perform throughout the whole investment period. Okay, right. So we've connected with someone like you or yourself. You've been presented a few deals. So like for example, Donna will give me a ring from time to time, say, hey, this just came up. This is something we're looking at. Either we're looking at and evaluating it. I'll let you know if we decide to move forward, or hey, the train's already going on this one. Here's the date you need to invest by if you want to take a part of it. You have someone like Donna, you're getting a deal flow is what I'll call it. And you've probably heard that elsewhere. It's just like, hey, here's some opportunities. Hey, here's some opportunities. You've analyzed those, the returns, the timeline. You made sure they fit in accordance with your current finances and your investment strategy, right? Like Donna said, can I take this $50,000 and be okay with not seeing it, touching it, have access to it for 5 to 7 years, or whatever the length of the project is estimated to be? Now I say, okay, Donna, I'm ready to go. What do I do next? I've read it. I've responded. I've said we're ready to rock and roll. What are the in detail motions? So
the next one is I'll explain a little bit about the timeline off the deal. Okay, so the beside you reading the PPM and signing it, that's the PPM is just a private placement memorandum, and then you said you want to know the stage of my money, right? Before we get to you wiring over your money and you transfer the fund. Before you do that, let's look at the timeline. First, we acquire the property. We do the underwriting. We do due diligence. That probably take about a month to do that, right? We choose on a property, fund the property, a month or two. Then you look at the renovation cost. That's most of the multifamilies that we look at Reid Elite Capital. They add value. We want to add value to them. And added value, meaning it's just basically updating it with maybe washing machine, a dryer, the landscaping, painting it, so that the tenants will feel comfortable and call it their home. With that, it would increase the unit and increase the rent as well, upgrading with them as well. And then that probably take about 1 to 12 months, probably a year, depending on how many units. Because we don't renovate the whole lot, every unit there. Just like the 200 units that we did in Dallas, we're not doing all at once. We do it in different stages. So it probably take about a year. And then we want to stabilize it, fully make sure that the rent everything is leased and occupancy is at the highest possible that it can be. So that portion, right, it was probably take about a year or two. And then we want to make sure when we start, what we do, we want to look at to make sure our investors get the cash flow. And that will probably take about a month before we start distributing to our LP. Because we want to make sure that we have enough in order to do the value add, the renovations. And then the exit from there is 5 years to about 7. That's when we sell and we get the profit, or refinance and we distribute the profit to the LP and the GP on that. So that's the timeline of the basics when it comes to starting the process for you, acquiring the property, and then after acquiring the renovation, stabilize it, make sure we have enough people there, the occupancy, cash flow. When do you get your cash flow, and when do we exit within the 5-7 years?
That is perfect. So I have a question for you that just popped into my brain.
Sure.
So if they do a refi at the end and they're going to make distributions out to LP, does LP still retain any equity, or are they buying them out?
No, it depends on which asset that one is. Okay. Very good question, Tony. Because you could still stay in the deal although they refinance it, but it depends on the structure of the deal and how long they want to keep you, or how long you want to stay into the deal too.
Okay, gotcha. So they'll probably flip you an option at that point.
Yeah, exactly. Okay. You have the option to stay in or not. Exactly right.
So in layman's terms, the question that I asked is at the end, so I put my money into this syndication. Let's say it's 200-door apartment complex, and the project manager's like, hey, here's what we're going to do. We're going to refurbish all of a certain amount of apartments with newer kitchens and washers, like Donna was saying, put washers in there so renters are comfortable and you can get more rent into it. At the end of the project, I'm expecting us to sell off the whole thing, right? The 200+ door apartment complex, and get some sort of return. Well, if they don't sell and they refinance their loan, right? So they refinance and possibly take money out because the property is worth more. My question was to Donna, and I'm just clarifying it so everyone understands, is when they refi and get that extra money out, are they going to pay off the LP, the people that paid in to this investment? Are they just going to pay them off and they're off on their merry way and they're not a part of it? Or do they still retain some ownership and collect money even after that? And so what Donna's response was, well, it kind of depends on the project, and sometimes you will get options on what you can do. So I just wanted to lay that out. I know we went kind of quick.
Correct.
Yep.
Yeah, definitely. That's so good. That's really, really good to clarify that too.
So I'm I'm in it, right? I'm in it. I've found you or someone like you. I've reviewed some deals. I've transferred the funds, which is a wire. So, like Donna said, I signed the agreement. The next step is Donna usually will ferociously remind me of due dates because I'm terrible with them. To hey, you need to wire your money over. So that's the next step is you wire your money. And then again, like Donna said, there's a period from when you wire your money to when everything kind of starts up. They have to get all their ducks in a row of when they close on the property, and then things start going. Throughout that timeline, I receive updates on how the deal is going. Those have looked different from time to time, just depending on what they sent out. But typically, I'll receive information on, hey, we've renovated this amount of units. Donna, what's some information on those updates that's key to look at?
Right. Those updates are really important. We may not talk all the time, but those updates come annually or quarterly or monthly. I tend to do mine a little bit more so that you're in know of it. It could be monthly that we do it. And if you're not looking at them, I'll reach out and say, oh, did you see that we did
Yep.
such and such, or we did that to the project? So you want to look at the income and expenses. What's the income we earned from it? What's the expense we spent on that property? Look at the occupancy rate. Also look at the cash flow distribution and look at the renovation costs. What did we use the capital for to update? Was it the washing machine? Was it the landscape? Was it paint in the front? Was it the driveway? So you want to be able to do that. But the LP portal, what we set up, many funds are provided online so that you could have access to it at your convenience as well. You also want to look at the annual report. What is the yearly performance on that particular project? We're going to be together for 5-7 years, if that. It could be 2 years, depending on how the asset performs. So you want to look at the annual performance of it, the tax documents. We're going to go in a little bit more detail about the K1s and also LPs and what they give. And also update when it comes to your market analyst. What does it look like? In Dallas, things are changing so much. You're looking at maybe a big major company came in there. We've been in there for 2 years, and the major company is coming in. Wow. That's going to make a big impact when we go to sell that particular asset. So you want to be able to look at the market trends and what's going on in there. And then we do investors call. Not very, I should say, this is one of my things that I'm working on improving more. Just calling more of my investors, and I do call. We give out the information, but yet still I'm open to whenever they have a question that they could contact me. So we want to just be able to be open communication, right? Create the monthly report statements that they will be able to understand, and create an annual report of anything new that's coming up in the area that we could share with them, that their asset is going to increase, or their whatever they put in their investment is going to increase as well.
Yeah, absolutely. And what I love about those updates is there's a ton of good information, like you're saying. It keeps you posted on everything that's going on with the project. What I like about the ones that I've been involved with is they also give you like you're saying, like a market assessment, like what's going on around the property that could affect the future, right? Like you're saying. And so that was cool. Also, there was in the last one, and probably once before that, I usually read them in detail, but it just depends on what's going on at the time. But on the last update, I did see that they structured the deal to where, regardless of if they have to refi or how interest rates go, they have enough cash reserves to pay regardless, right? Like things like that. They're going to give you information that you otherwise wouldn't have access to without literally calling like a laundry list of people, Donna included, to figure out, right? You're going to get a full report on what your money is doing. Like Donna said, where are they spending the capital? How far along are they with the project? So it's super important to read those because they will keep you posted. All right, Donna, K1
Exactly.
time.
Wow, K1s are so super cool though, but you
Yeah.
know what? K1s is just basically a document that you get at the end of the year, I should say, at the end. I should say at the end of the year, you get the K1s, and the K1s just gives you the income, the deduction, and the credit that was shared, a document that gives to all our investors. And when they look at it, you want to be able to look at the report, what investments you made, right? And what were the losses that you made on it as well. You want to look at the GP, what's sent to you annually. It's just something they send annually. But you want to look at the rent, the capital gains that you made on it, right? The deduction, the mortgage interest, and the depreciation, which is a bonus for you.
Huge
because
bonus.
now,
Yep.
yeah, now they're given 100% depreciation on that. I think is a beautiful bill. And also the credit, what credit and what major improvements that they did on the projects that has helped your investment increase as well. When you look at the K1, you were able to give that to your CPA, and you could be able to write off the depreciation and passive losses that you've made along the way. So it's a good tool. And sometimes I must admit that it may come in late because you're waiting for the other party to get it in order to present it to your CPA. But we try our very best, not guaranteed, but we try our very best to get it out to our investors on time.
Yeah. So when I got that, it reduced my tax burden by more than I thought it would this last go around, which
Yeah, I
was
remember.
great. Yep, exactly. So your K1 is your tax form, right? You're making an investment. You're making either returns or a loss on something. You have to report it to Uncle Sam. This is a form in which you do so. Like Donna was saying, there are some advantages in a real estate investment like this where you can write off some depreciation, where you're going ahead and assuming that the value of your assets going down on paper for tax purposes, which means that you can write a lot of it off to decrease your tax burden and save, aka save more on your taxes, either pay less or, depending on your situation, pay a lot less. That, in a nutshell, is going from A to Z, right? You're working with someone like Donna. You're getting access to deals that are getting underwritten or, aka, investigated to see if they're worth anything by a team of experts, team of people that are doing this day in and day out. You get access to those deals. You get to review that deal information. You get an expert like Donna to help you review those and tell you what are some of the pros and some of the cons. You get to assess your current finances, see if that's something that you want to jump into. If it is, you're going to sign a few papers, make a transfer of money, and then once that is confirmed, you're going to start receiving updates on how your investment is going, and if it's following along with the plan that was stated at the beginning. And then you'll do your yearly taxes and you'll submit your K1 tax form, all in, depending on how the investment's going. You submit that, you may reduce your tax burden oftentimes, pay less in taxes overall. And then on exit, which means that they sell off the asset and or they do a refinance and buy you out, you'll make X amount of whatever was assigned in that project, right? At that point, the thing I want to highlight is when you exit, if you pay capital gains, you would get your cash, you would pay your tax, and now I can spend that cash on any other type of investment that I want. I could invest in cereal boxes or some random thing. The other option is a 1031, and this will be a foreshadowing for another episode, but it allows you to take that money, not get taxed, and put it back into another investment of equal amount of that money or more and delay the taxes. You are not paying taxes, you are delaying them for a date in the future. And there are tax strategies around that to keep that future date out as far as possible, and we'll go in that in another episode. But that is, in a nutshell, going from A to Z on how a deal transpires in this type of investment. Donna, thank you so much for jumping on. I really appreciate it every time you come on.
Absolutely. I love having that conversation. And you made it so easy for me. So how could I say no?
Well, thank you all for hopping on, and we will see you on the next one.
See you guys. Have a good one. Bye.
Bye.
Thanks for listening to the Learning Investor Podcast. One step smarter, one thought better. We'll be back soon, you already know. Until next time, that's the show.